is Radio Bath.
Welcome to the 1 o'clock version of Brave Business Conversations. We are in the studio with individual chartered financial planner. Hello again.
Hello again.
It's been a while.
It's good to see you here.
Yeah.
And Greg,
Good to
yes,
be
you've
here.
forgotten all about
I know.
us.
I've been trying to escape this this Tuesday afternoon dungeon, shall we call it?
Ever since you criticised his herbs, I think.
I know.
Cynthia.
Yeah. Basil Man is in the house.
Basil Man's in the house. I'll get a hoodie with that on the back.
Yeah. It is good to have both of you back.
Likewise.
And we are
Thank you.
talking about tax planning. Very
That's right.
timely.
hmm
But is tax planning just a nice word for it? I mean, isn't tax mitigation kind of illegal?
So it's probably one of the most common questions we get, especially when we're sort of speaking to new customers or they're sort of asking about our services that we provide. There's a real difference, and we need to distinguish it, I think, before we go any further on these
Yes.
conversations. I'd be extremely brave to come on here and talk about all these illegal ways of
This is not
avoiding...
exactly what I meant by brave business
No,
conversation.
exactly.
But yes,
It's a
sure.
different meaning of brave. So to be absolutely clear, in the industry, we talk about mitigation and avoidance typically. Now, mitigation is a nice word for the planning side of the sort of tax mitigation, i.e. it's the legal way of reducing your tax liabilities, whether that's through relief that a government offer or allowances that you can use to invest into certain vehicles, etc. So mitigation, whenever we talk about that, that's okay. You know, the government set out the rules, and as long as you fit within those rules, you've got nothing to worry about. Avoidance, on the other hand, is that big scary word that, as financial advisors, we get our backs up about it, and that is the illegal way of reducing your tax liability. So you know, I won't name any names, but there are lots of sort of stories we can see online about moving money offshore in certain ways and effectively hiding assets
Yes.
to prevent paying that tax. That is illegal. That's not what we're talking about today. And Simon's got some really good information about some of the ways that we can do it. And actually, when we talk about mitigation, most of us will do it now. Most of us will mitigate tax in one way or another,
Yeah.
whether we're consciously doing it or not. So it's a really good subject to have. It's a really important question. But no, to be absolutely abundantly clear, especially if there's anyone from the regulator listening, we're talking about mitigation, not avoidance
Not
today.
avoidance.
Yes.
That's right. And it does give you that feeling of freedom when you understand what allowances you have and how to use that. I mean, it makes clients, I'm sure, feel a bit more empowered.
Yeah,
Absolutely.
absolutely. Yeah, completely. And as Greg alluded to, so often we are mitigating tax when we're not even aware of it. So an ISA is a classic example of that. Individual savings account. We talk about it a couple of times on your show. You can have the cash version, or you can have a stocks and shares.
Just for the
version.
new listeners, what is an ISA and how does that mitigate tax? for
So
instance?
it's an individual savings account, and any individual in the UK can invest up to 20,000 a year into an ISA. Essentially, within that, what we call a tax wrapper, effectively just a glass box in which you can hold cash or investments. There is no tax liability. So any capital gains you realise within an ISA are not liable to capital gains tax, and any income-producing investments you're not liable to income tax. So that's just one of the main sort of allowances that's available to everyone in a year.
So how do I know what allowances I have?
So, number of ways you can do it, and again, this is one of the examples of too much information out there can sometimes muddy the water ever so slightly. So, if you want, there are some really easy, trusted sources of information out there. First and foremost is the government website. You can find all of those allowances from the horse's mouth, so to speak. You then have other sort of independent websites from that, but they're also government-backed. So Money Helper is one, which used to be the Money Advice Service. There's MoneyWise as well, which again there's a few out there, but also most reputable financial advisory firms or accountancy firms will have on their websites or their guides, whatever they may have, and we've got one as well, which basically says here are your allowances for the year, what can you invest. I think sometimes though, when there are so many different, and Simon's used a word, a couple of words that are really relevant here. Tax wrappers. Tax wrapper, as Simon says, just a glass box which the government tell us how that tax is treated, whether there's income tax, capital gains tax, or inheritance tax, whatever it may be. And what we've got to realise is there's so many different ways in which our assets can be taxed. It's about having one or two people in your sort of professional toolkit that can tell you, right, this is how to structure things properly. And, Simon mentioned ISAs. Pensions are a great example of this as well. Most of us now who are employed will have workplace pensions. Employers now have to provide that to us. how those contributions are paid, and there are several ways, but typically how those pension contributions are paid, there is tax relief available there to individuals at either basic rate, higher rate, or additional rate tax. So, Simon mentioned that we're doing it almost without realising it, and that is a classic example where most people now who are employed, or most people, even if they aren't employed, if they're self-employed or, maybe slightly later down the line, they will have pensions. And therefore, that is the best way of mitigating, or certainly one of the best ways of mitigating income tax.
Exactly. Inheritance tax as well.
Absolutely.
Yeah. So whatever phase of life that you're in. See, for me, as someone who gets really confused with all these terms, I remember tax wrappers was a term I learned last year when I started my ISA contribution. And I was like, wrappers, I'm thinking candy wrappers. I'm thinking you're going to put my money in it. I mean, it's really, really silly. But then, of course, I've got the guts to say, excuse me, what is that? You know? And then I come from Asia, or at least when I invested in Asia, they're called different things.
Sure.
And so I think one is just ask if you don't understand. But at the same time, what really helped me was just laying out my portfolio in front of a trusted financial advisor. Because sometimes I can ask, I can Google this stuff, I can go to the government website. I don't know what I should be looking for.
No.
But when somebody looks at my portfolio and says, actually, have you ever thought of this? And because you guys have it all in your head.
Yeah,
you can look at someone's portfolio and just says, actually, you haven't optimized that, haven't done that, haven't done. Instead of saying, what are my allowances? And then you will get so confused, right? I think for listeners out there who are thinking of getting all these tax planning done, for me, the best way is just to lay out your portfolio, find someone you can trust, lay out your portfolio, and if they've got enough experience in their heads, they can tell you what to read and direct you instead of you trying to figure this out by yourself. Would you agree with that?
I'd completely.
Yeah, completely. And I think, again, happy for Simon to disagree. I think for a lot of clients, they'll put themselves on a spectrum of how involved they want to be with that process. Some clients, once they trust you and know that you can do a good job for them, they'll just tell you to crack on and get on with it. And obviously there are regulatory and compliance processes we have to go through and involve them at those stages. But, it's like, rather than come up with 3 or 4 options, just tell me what you think is best and why. And it's a much more straightforward process. Other clients, though, however, want to be really involved in those processes. They want to understand how their allowances work, and if they don't use it in a certain tax year, will they potentially lose it moving forward, and all those sorts of conversations. And I think that is part of, yes, you're absolutely right, Cynthia, we've got all this information in our heads, but the real skill in what we hopefully achieve for our clients is understanding how much of that knowledge clients want to understand. Because there will be some people out there that even if they're engaging in a financial advisor, the idea of someone talking to them about a tax wrapper, in inverted commas, is one that would actually put the fear of living Wotsits in people. But some people want to know that information. So again, we've got to make sure that we're giving enough information that the client's informed, without then things and worrying them to the point where they then don't want to go forward with advice that is really going to put them in a much better financial situation.
Yeah, absolutely. I mean, I think I'm more of a middle ground. I'm happy to ask a few questions.
Yeah.
But then sometimes I just ask them. I Google something and then I'll ask that a question just to see if they know what the answer is. It's just kind of a
You're definitely not
test.
in the middle then, Cynthia, if you're doing that.
We'll be back with more Brave Business Conversations with you.
This is Radio Bath.
Welcome back to Brave Business Conversations, still on the subject of tax. So we talked about how we can research what's available to us, our allowances, but what are traditionally some of the allowances available to us for tax planning?
Yeah, of course. So we've touched upon ISAs initially, and then pensions, which because of their tax breaks, they are almost your kind of default go-to. Like, they should always be your first port of call. But we were talking just before the break about slightly more, people who want to be more involved and maybe sort of slightly more advanced tax mitigation strategies. There are certain investments, albeit it's important to say they are the higher end of the risk scale, where essentially private investors can invest in small sort of fledgling startup companies, and investment into these companies comes with tax relief. At various rates, typically 30 or 50% of the amount you invest, you will get back in tax relief. And the reason behind it is because, from the government's perspective, it's quite expensive for startup companies to raise capital. But if they can get it from private investors, these companies then grow. As they grow, they make more profits. Those profits are then subject to corporation tax. They employ more people, which brings down unemployment. So I think often sometimes they're given a bit of a bad press, but in the right situation for the right client, there's some pretty advanced strategies which Greg and myself and the other advisors at Individual deal with quite a lot, and it's an area we feel that we specialise in.
Is that a fund of small companies, or
Correct.
is it okay?
Yeah.
Right.
That's right. Yeah.
Well, that's interesting. Yeah.
Yeah, probably a bigger conversation for today's show.
Yeah, I
but,
was just
but
going to say.
just something we wanted to
Let's
touch
have
upon.
one show about that.
Yeah, but
And I have to say, you have to be investing in those companies, listeners. It's not like you give a loan to a small company
Correct.
and then get like
Yes.
12% interest a year or something and call that an investment. It's got to be that.
And I think from an investor's point of view, I think tax mitigation, certainly for those that are, these are the sorts of products that are probably for those that are on the higher side of the net worth sort of spectrum, and that more sophisticated, but also have experience in investing in single company shares. So you can sort of build up a picture of your sort of atypical individual or individuals that might be investing into these types of things. And
Is
I
there
think
a minimum?
most will have minimums, but also it's about the minimum for the provider is different than to the minimum of the capital that you need. So Simon's already mentioned that things like ISAs and pensions, you should be fully utilising those allowances before you go anywhere near some of these strategies. So actually, if you look at how much money you need in a given tax year, before you could even start looking really at these sort of tax mitigating vehicles, it's quite a lot, really. Simplistically, you're talking well over £60,000 that you're going to need to invest in a given year before you can start looking at these. I mean, I think from an investor's point of view, and Simon touched upon something that's really important about the sort of the ethics of these investments. I think a lot of people that aren't in the industry and don't see how they work firsthand can actually find tax mitigation, certainly for those types of individuals, quite repugnant, really. And it's a very taboo subject in the UK. But actually, if we, Simon mentioned the fact that these are investing in UK businesses to help UK people to build UK jobs and to therefore thrive in the UK economy, really. It's not putting money offshore to countries that are already so wealthy that they don't, or they have such a small population that it doesn't really impact people. It goes to fund things. The revenue goes to fund things like the NHS, which is invaluable, and other services that in the UK we definitely don't take for granted anymore. We've seen their value and their worth certainly over the last few years, but that can go unnoticed. Where does that pot of money come from that the revenue can then use to fund those sort of public services?
And that's why the government gives you special benefits to invest in them, because it's kind of like you give and you take, and everything's fair. What else? What other allowances should we know about?
So one thing that just to briefly touch upon, probably the opposite end of the scale. So every individual in the UK has a personal allowance, which is currently the first £12,570 of income is taxed at 0%. One thing that some couples will be aware of, but not everyone will, is that actually there is an ability, if one in the couple isn't working, they can effectively give their allowance over to their partner. Married couple allowance, so
they can get 24 or 25k.
Not the whole thing, unfortunately. It doesn't quite work like that, Cynthia, but a percentage will be kind of shared. I think, and another area we were talking about actually ahead of the show, Cynthia, is when we talk about tax mitigation that people aren't aware of, something as simple as when you give to charity, if you tick that gift aid box, that's an example of tax mitigation that does some massive good, because it can increase the amount that you give to charity by quite a significant amount.
Yeah, it doesn't benefit you though. It's not tax deductible to you. However, if you give £5, you're actually giving, I can't remember the calculation, but more than that. Yeah, it goes a long way.
Yeah, completely.
Absolutely. I used to volunteer at the Holborn Museum, and we always asked, would you like to gift aid that? And then that's like my line. Great. What else? What else can we do?
So, I mean, for those, if we've talked about individuals, but I think for businesses and those that run their own business potentially, that we're hearing about changes to dividend sort of rates of income tax, and unfortunately they are on the rise, as most things are. But it's about making sure you're utilising those allowances properly. So, a combination typically of earned income and dividend income can be extremely tax efficient for those individuals, but it's also about the wider implications of that. We can see that a lot of people at the moment are reviewing their mortgage propositions at the moment and their current mortgages, and that may seem like, well, hang on, we're talking about tax here. What difference does a mortgage have on my tax position? Should you go down a very complex route of structuring income in a very complex way that a lender might not fully understand, that can actually be detrimental to you on a mortgage application. So this is where all these different areas, which may seem like very standalone individual areas of financial advice and planning, they're all so intrinsically linked with each other. It's really important to either have an individual or a business or an advisor that you can trust to sort of build up that picture and make sure that everything's working cohesively together, because what you don't want to be doing is saving money on with one hand on income tax, but then not being able to get a good mortgage deal and therefore paying a high level of interest, and obviously we can see that interest rates are on the rise, and therefore a lot of those savings that you may be making from an income tax perspective are being completely eroded by the fact that you're paying over and above the odds for interest.
And
So
or you save here and there all your life, and then when you die, everybody gets cut off with the inheritance tax.
Well-
That's it.
Yeah.
Yeah, well, you won't be there to see it, but other people will feel it.
No, and that's
And
another area that we do help people a lot with.
I remember a
tax.
show last year, I think, or was it 2 years ago? We were talking about how to leave everything, all your finances, in good shape for your family. And we were
Yes.
talking about death. We just couldn't figure out a title that was nicer than this, death, right? But it was such a good show because it was just equipping people with understanding is how do you leave things behind? Because the last thing you want, they're mourning for you. They're sad that you went. Or hopefully they're sad that you went. And then they've got to take care of all your paperwork as well. That's really, really terrible. Well, we'll be back with more because I want now to talk a little bit, beyond allowances. I want to know are we always going to have the same allowances all the time? What affects our allowances? Because I think it's important for the listeners to feel up to date using this show. Thank you.
At Plate Restaurant, set just behind the Bird Hotel in Bath, and indulge yourself in proper wholesome food and wine. Our ever-changing menus feature the finest ingredients from farmers and fishermen, hand-picked to create spectacular, playful dishes, ideal for sharing and socializing over. You'll love the outside terrace, the cozy lodges, domes, and food served up with cracking views over Bath Abbey and beyond. Open every day. For reservations, call 01225 580 438 or find out more at thebirdbath.co.uk.
Here at My Small World Toy Store, we fully appreciate how bonkers the average family breakfast can get because we're parents and carers. So if we could deliver your breakfast to you to make life easier, we would. Instead, we'll settle for getting you same-day delivery on beautiful, sturdy and unbeatably cool children's toys. So we've got you covered for that last-minute birthday gift, even if we can't help get cereal out of your little darling's fringe. My Small World Toy Store. For the little gifts, for the big gifts, for everything. Come and see us at Southgate Bath or visit mysmallworld.co.uk.
Banduke Kitchen, 3 to 7 Milsom Place, Bath. Indian street food now in the heart of Bath. Our talented chefs are at hand to effortlessly prepare delicious traditional street foods with an innovative flair, from Bombay to Bath. Banduke Kitchen are serving a large selection of unique, flavoursome street food from chai brunches, luminous lunches, cosy evening dinners and fabulous cocktails. Come and eat Indian street food with us. Banduke Kitchen. See the menu and reserve your table online at bandukekitchen.com or call 01225 300 600.
Say hello to Cook. One of the country's leading ethical businesses has arrived in Bath with our award-winning frozen meals and puddings. Cook's food is made like you would make at home in carbon-neutral kitchens, then frozen to cut down waste and lock in flavour. There's something for everyone, from healthy meals in minutes to lasagnas and pies perfect for the family, or a beef Wellington and indulgent pudding for a treat. Drop by to meet Tanya and the team at Cook's new shop, 12 to 19 Wells Way in Bear Flat, or order a home delivery from cookfood.net. Relax and let us cook.
This is Radio Bath. Radio Bath.
We're back with Brave Business Conversations. We certainly have talked about brave things during the break as well, yeah?
Very.
So we talked about allowances, how we can find them, what they are. Do they change or is it pretty constant?
So the government each year, well, they do it sometimes more regularly than this, but each year they will effectively release their budget, and that will include a multitude of different bits of information that will impact individuals, but also the UK economy and effectively where they see things going. But a big part of the announcement is what changes there are to allowances, such as ISA allowances, pension allowances, some of the things that we've discussed today, but also then different tax bandings and whether they're going to increase national insurance or increase income tax or extend certain bandings, which we have seen a lot of over the last budget announcement. Now, historically, and I may be speaking for some, not others here, but historically the budget's been one of those things where we might hear about it for a few days in the news if you're watching or reading things, and then you forget about it, really. And the main reason for that, certainly from an individual's perspective, is because there have been such small changes to the budget, realistically, relative to sort of increases in cost of living, which historically have been quite low, that it's not really made a huge difference to a lot of families and a lot of households.
Yeah.
The difference that we're seeing now is that with the cost of living increasing so rapidly and has done so quickly and almost really out of nowhere, that the budget now is even more relevant to those individuals, well, to everyone really, everyone that relies on whether you're claiming state benefits all the way up through to being a multimillionaire, and everything in between. The budget will now impact on those individuals a lot more so than it has done historically, especially then when you look at the difference between income and sort of expenditure. So, we're often asked, is the budget even really relevant? Yes, it is. But again, as with everything financial, unfortunately, there's a huge amount of information out there. Everyone's got their own take on how the budget's going to impact people. And again, it's about making sure you're getting that information from trusted and reliable sources, government website, mainstream news outlets, I would say, financial advisors and guides. And again, we've got another guide that Sherry-Ann very kindly put up on our website about how the budget will typically impact, a varying few different examples on there for different households. So getting the information from the correct and a trusted place is very, very important. But we are going to see now that the budget is going to have a bigger and bigger impact, and it's certainly more relevant to people now than it probably has been historically.
There's been a lot of changes this year, and this is, if anything, this is a good time to pay attention to that. Tell us more about your guide and how we can access that.
So as with all of our guides, they're available on the website, which is unividual.co.uk. If you just use the kind of menu bar to go to financial planning guides, there's a wealth of information there, which is completely free. Help yourselves. Have a route around the website. There's plenty of information there.
Absolutely, and you don't even ask for details or anything. You just download.
No, I think a lot of
a database collection.
Exactly, because I think sometimes that's a barrier for people. If they think, oh God, I don't want to put my details in there because then I'm going to get spammed. We don't do that. We just, it's there, and hopefully that will, pique your interest, and you might want to talk to one of us friendly financial planners.
Yeah, friendly financial. You said that in one mouthful. That was quite impressive. That's very good. When we talk about tax, is property a more tax efficient way of investing?
So this one comes up a lot with clients. In this country, we are, we're big fans of property as an investment for probably a number of reasons. Like I look at my parents' generation, where they bought their house for probably like £12,000, and and it was that was probably like a year's wages, and property values have just increased massively over the years, and so people look at it and they think. I mean, I'm to be clear, I can't fully bash property as an investment because for a number of reasons, often it benefits from gearing. So the amount that you're actually having to stake for the investment is less because you can use, borrowing. So that means that the return is greater due to gearing. And, property and equities or shares are kind of the two assets that typically have a rising capital value and a rising income. So as I said, look, property has its place, but as has been well publicised, housing stock in this country is limited. A lot of people.
When you're an island, you can't build more.
Exactly, and not enough people are getting on the property ladder. So, over the course of several years, governments have put in place kind of more and more sort of tax barriers to owning property. A couple of highlights: higher rate of stamp duty on your second property. They've removed the ability to offset a certain amount of your mortgage interest for tax purposes. The other risks, I think, with property is that it is a very illiquid asset. If you hold a sort of typical mutual investment type investment, you can dispose of an element of that to release capital. unfortunately you can't sell 5 bricks or a window, for all of these reasons. So unless there are options potentially in terms of structuring it within a company, but that is quite complicated and needs the benefit of some assistance from a professional going forward. And also, whilst it may have benefits from a tax efficient point of view in the short term, long term you're still going to have this property that eventually, when you want to dispose, you touched upon inheritance tax earlier on in the show, and also just the ability to release that. So I would say that was a very long-winded answer to it's not the most tax-efficient way of investing. There are more tax-efficient ways of investing. Got anything to add, Greg?
No, I would agree. I think some of the hidden risks of property, and you touched upon liquidity, i.e. how readily available is the capital that was within that asset, is one. And I think there are others, though, because, we're in a UK environment whereby, rightfully so, the tenants have a higher level of protection than landlords, and that goes to some of the points that Simon was mentioning. But from a potential investor's point of view that is investing in property, that brings about its own risks. You've got tenancy risk, which, either they don't pay on time, they damage the property over and above beyond. And, we saw over lockdown where, notice periods were extended and eviction notice periods were extended. They're still quite high. I think they're currently at something like 4 months. So in order for you to go through that process, and unfortunately it happens far too regularly with some of our clients, we go through and hear absolute horror stories of, trying to get tenants out and, coming to the end of the lease or wanting to sell the property and not being able to do what they want to do with that property, which is their asset at the end of the day. It's in their name. But because someone else is living in that and has an equitable right to reside in that property, they're restricted. And I think it just brings about so many additional complications that when you look at it all as a collective piece, you really have to be of a certain type and to have to be able to withstand certain risks for property to be a suitable investment.
Yeah, I've gone off a little bit on property. That was, being an Asian kid, you see your parents buying land, buying homes, and it's not like we don't have a home. We just buy extra ones, you know. But it's one of those things that, in the 80s, when the property boom was there, when there wasn't any risk on capital gain, everything was just going up, when you can have rental yields at maybe 10%, wow, but that's great. But then when the illiquidity part, there might be some tax benefits, but at the same time, like you guys were saying, can you withstand all the things you have to deal with? And you can't control any of it. It's not like you can vote and or you can't control the stamp duties. You can't control anything. And I think investment or is anything good for investing, it has to be like, my question is, well, how much can you control? Property and even mutual funds, right? Or even funds and everything. You can't control what these companies are doing in that mix. You can control by studying them, talking to the right people. But at the end of the day, even if you did invest in equity, it's somebody else's company. Property, you can't control all the laws. You can't control everything, but probably the best investment vehicle, if you maybe also for tax efficiency, would be business, right? To open a business, to be an entrepreneur. And what I like about the UK is, I think you guys are the top 5 most entrepreneur countries in the world. You guys are up there. Because I remember Indonesia was up there as well. And we're like, ooh, we're up there together. But, the entrepreneurship part. And when I was active in the British Chamber of Commerce, we also talk about doing business with the UK, and everything is, the great brand, Great Britain, everything is great. And one of them is about entrepreneurship. And I think owning a business, you have full control over what goes on to your business somewhat more than your property and your equity. What do you think about that? Is business a good investment, a good tax-efficient way of doing
I think
things?
to pick up, I think it's good to have a little bit of everything. So I don't think your full portfolio should be property, because look what happens to people in 2008-9 when everything they had was in property. Equally, and we've talked about this with clients as well, you shouldn't rely solely on your business, so I think it's all about that buzzword,
balance,
diversity, diversification. If you can have a little bit of, like I said, property, it has its risks and its downsides, but some people love it and it's a passion project. But just have some other areas of investment, and the same with your business. look at for opportunities. What do you think,
Yeah,
Greg?
yeah, I think
Agree.
business owners will, I hope, agree, but you don't realise how much is involved in running a small business until you've been there, done it. And, you can speak to friends, you can speak to family members, you can speak to professionals in the industry, and they can give you a good idea. But until you actually engage in that process, actually take that blind leap of faith sometimes. You can have as many business plans and models as you want, but until you're actually out there on the coalface, it can be quite a scary environment. So you just need to go into it knowing that there are going to be a lot of ups and downs, and that, sometimes businesses, as with anything really, but businesses in particular, small businesses that people are setting up, can take a few years, if not a bit longer, to really start to build up traction. So if your family or you as an individual are in a circumstance where you can withstand that, and you've got your emergency funding, and you've stress tested all the models, and again you've spoken to the people that are in the know or in the industry, then go for it. Absolutely. I think there's a massive value in that, because what owning your own business can do from all these things that we've spoken about from a tax mitigation and tax efficiency perspective, unfortunately, individuals don't have anywhere near the same allowances and reliefs available to them that business owners do. So, yes, you're taking a higher level of risk, but actually, if you get it right, there's a much higher level of reward there as well. And as you said, Cynthia, balance is key. But actually, there are some really fantastic opportunities out there, and what better country to, do it in with one that's very supportive of small businesses.
True, very true, and that's true. It's not for everyone.
No.
Entrepreneurship is not for everyone. I know people who have gotten rich and secure in life, just being an employee and doing what needs to be done with their tax planning and their financial planning. We'll be back with some closing statements from Unividual after this.
Across Bath, Westbury and Warminster, this is Radio Bath.
Perfecto International Food Market is cultural food and shopping for everyone, and is now open in the heart of Bath. With food and produce from over 59 countries and over 4,000 products to choose from, we've got exactly what you need. Marvel at the range of fresh fruit and vegetables through to a wide range of meat, including halal. There's something for everyone. Come and see us at West Point Avon Street, Bath, or see the virtual tour at perfectomarket.com.
Adele's Takeaway on Shaftesbury Road is the place to go for all your favourite dishes, including authentic, traditional and delicious grilled meat kebabs, pizzas, chicken, vegetarian burgers or meat burgers, plus many more dishes for the whole family. Adele's can deliver straight to your door with free delivery within the 3-mile radius on phone orders of over £13. Why not ask about our meal deals too? Open 4 p.m. till 11 p.m. Last orders 10:45. Call 446 445 or visit adelstakeaway.co.uk.
Need that special gift for a loved one? Birthday, anniversary, special occasion, or just a treat for yourself? Bath Aqua Glass Shop at the Abbey Church Yard is open Monday to Sunday and have the perfect handcrafted unique gifts for every occasion. Designed and crafted in the heart of Bath. Plus, activity bookings are also available for an extra special gift. For details of offers and our glass-blowing workshops, call Bath 428 146 or visit bathaquaglass.com. Supporting independent shops. Bath Aqua Glass. Made with love, given with love, sent with love.
We are finishing up our segment with Unividual. I thought that was really, really interesting, guys. Tax planning has never come to life like that.
Yeah, I mean, when we started the show, it was sounded like it might be a dry sort of 45 minutes, but I think we made it interesting.
Yeah, and I think it is very, important what you said about, usually it's samey every year, samey. You don't even have to watch the reports on the budget, but now things are hugely different, so it's if you're gonna spend time learning about the budget, it would be this year.
For sure.
Yeah, absolutely.
Yeah.
For sure.
So what are some key takeaways?
So I think for me, it's knowing what your allowances are. So, as Greg said, there's plenty of resources out there, free resources, money helper, things like that. Work out what you can use. But I think to follow on, my second takeaway from that is it is very much a use it or lose it situation. Those allowances are available for that year, and if you don't use them in that year, with the exception of pensions, but that's a more longer story, but yeah, certainly know what you've got and use it before you no longer can.
Yes, that's a good one.
And I think mine would be very budget specific, so understand how that is going to impact you. You don't need to know the budget and what the announcements are inside and out but have either someone that you can trust that's going to give you that informed and honest opinion of how that budget announcement will potentially impact on you, so that you can plan ahead of these things. There's nothing worse than realising 4 or 5 months into a new tax year that actually you're getting a lot less and you're going to be in trouble in a few months' time, and you're draining savings potentially. So, which then links into, if you don't have friends or family that have that level of skill set or knowledge, which I would say is probably a first port of call really for most things, then go and speak to a professional, whether that's, accountants can certainly help with this, financial planners in particular. We sort of will be a bit more forward planning with a lot of these things, especially when you're looking at areas like running your own business or retirement and things like that. So I think it's a combination. As we said, there's a really good word of balance, I think, across all of this. What happens in theory doesn't always relay into a practical sense. So it's about understanding how much involvement you want, what your level of involvement is, and then who then can support you to sort of fill the gaps. Whether that's a financial advisor, an accountant, friend, family member, just making sure that someone, if it's not you, is looking at the whole thing.
Yeah, I think if you're just, maybe if you're young, you've got plenty of time. But my takeaway has been, especially from someone who is not so financially savvy about all these terms and rules and everything, and honestly have very little interest to understand them, but it just helps to show someone your portfolio and talk to them. And the good thing about people in this country is that when you call yourself a chartered financial planner, you can't fake it. There are certifications you have to go through. There's the rules that'll catch you if you do something naughty. In many countries, you don't have that. You can call yourself whatever you want. So thankfully, you have this advantage, and just take your portfolio and talk to them instead of, you can research stuff on websites, but if it gets, if you get this like little brain ache, feel free to just go and call on people like Unividual and everything like that, only because they're in front of me.
You have to say that.
You have to say that. No, they are lovely. They have been absolutely lovely. And visit their website at least. If you find it confusing to look at government websites, which can sometimes be written in a language that is quite confusing, go to Unividual's website and pick up the phone, talk to them. But sometimes the reason I can do what I do now is that I feel that my finances are finally managed, not because I understand, not because I've read so many things, but because I talk to the right people, so, and sometimes friends and family are great, but nothing beats a professional. Fantastic, guys. Thank you very much
for having
being
us.
on the show.
Yeah, thank you for having us.
And we'll be back next month.
Yeah.
Yes.
More fantastic topics.
Don't ask us what we're doing.
No, absolutely not. Yeah, no. Actually, you probably have your topics for the year, so we're happy for that.
Okay.
Yeah.
Good.
Trust me, we've got it.
We got it.
Yeah, got it.
Cool.
Right.
Someone's had an email.
All right. Enjoy more music after the news hour.
This is Radio Bath.